And that's what makes Google a $1 trillion company. And that's why Rand McNally, is not with us, right? I mean, it's so if you understand that, then I guess March 2020, the first thing that happened was getting slugged in the head with a 2x4. You're failing, your money's going to zero. And the second observation was, oh my, there's actually been a digital transformation of property, currency, and energy. And I didn't quite appreciate just how profound it was. I just knew I needed a solution. So I started looking for a digital gold, right? I wanted a non-sovereign store of value asset. So it really legitimate. It literally was a question of, do I buy $500 million worth of gold? Or in this case, it was $250 million of gold. Or do I buy $250 million of crypto gold?
Mm-hmm.
And if it's crypto gold, well, I think engineered synthetic gold is better than gold. And now I just had to parse through all of the hundreds of options to conclude that Bitcoin was synthetic gold. And that was enough to solve my problem in the near term, which, how do you got a mortality situation. You actually have to find synthetic gold. They want property, and buying a building in Africa, buying a bar of gold, buying a security, it's either not practical, it's not safe, or it's not efficient, right? When you buy property, you have to buy scarce desirable property with a low maintenance cost, that's portable, that has no counterparty risk. And so what you have is a real huge demand for digital currency and digital property. And once you understand that, then you realize that this is the digital transformation of currency, property. And of course, I'm an engineer. So I see if it's a conservative thing, it's energy. So it's digital energy. And we never had, in the first wave, in the mobile wave, we never had digital energy, digital property, digital currency. And it's such a profound paradigm shift that everybody in the world using this stuff. Yeah, well, my thoughts on all those subjects is the big blockers were profoundly wrong. And it's pretty obvious they're wrong, because Bitcoin Cash has lost 99.5% of its value in 5 years against Bitcoin. So the market's trying to tell you it doesn't like that idea. But the idea was wrong on the surface, because if you're changing the protocol economically, it's an ethical lapse. And so when you actually when you monkey with the block size, you're screwing with the economics for the miners. And when you're messing up the economics for the miners, you're undermining the integrity of transaction fees. And when you do that, you're undermining the integrity of the security of the network. So generally, I think my view at this point is any kind of software upgrade that materially changes the protocol for any reason other than to cure a fatal security bug. And I think with regard to economics, right? You can't change the economics of the network. So when you destroy the miner's economics, you destroy the integrity of the network. And when you advantage one constituency over another constituency, you undermine the integrity of the network, and then nobody trusts it. And you have to be able to extrapolate out 100 years in order to trust it. So I think that conservatism on the base layer is important. As for what I think will happen over the next 30 years, I have a model which is multi-layered. I mean, this simple model, which is, okay, there's a layer one and it does everything. That's just too simplistic and monolithic. And I just think it's wrong. It's intellectually bankrupt and wrong. That's one of the problems with the thousands of cryptos that think that they have to build layer ones to do transactions. It's just a wrong idea. The universe doesn't work with one element, and it doesn't work at one frequency. A logical building is, I have granite, I'm on schist, I have glass, and I have steel, right? There's 4 elements, right? I mean, it's common sense. Walk through Manhattan and look at the building. Steel, granite, on bedrock, looking through glass. Okay, if I took, which of those elements do I take away? None of them. You need them all. Okay, so how's the world going to evolve? Well, the foundation is a very high integrity, highly secure, stable layer one. The most stable one is Bitcoin. It's proof of work. It needs to be a commodity. It can't be a security. Can't have an issuer. It doesn't, 7 transactions a second is fine. It doesn't need to do any more than that. If I could move all of San Francisco every 135 milliseconds, it'd be too fast. It's fast enough. I just want to build something on San Francisco. You could put $100 trillion of monetary energy into the base layer. And then moving to the last issue, I don't think the world wants currency. So understanding that money is composed of property and currency in the current environment. The currency is high velocity money, and the property is low velocity money. And the reason that currencies will continue to exist, like the US dollar and the euro and the yen, is because nation states will continue to exist. So until the European Union crashes and the Japanese government crashes and the US government is gone, there will be a currency that's mandated as a medium of exchange by that nation state. So if you look out over the next 30 years, I'm not forecasting the fall of all nation states. I think that there'll be CNY, USD, Euro. I think there'll be shuffling of balance of power. I think that the killer app is a mobile wallet sitting on a phone delivered by Apple or Google or someone, ideally Apple. Apple creates a mobile wallet, builds in a secure element that's like a hardware wallet, as an authentication device, implements multi-factor authentication. Well, I think the constructive way to think about this is the digital economy has 6 layers. The base layer, the layer one, is Bitcoin. It's the property layer, the monetary foundation. The layer two is Lightning, an open transaction protocol or a competitor to it. Layer 3 is an application like Cash App or PayPal that moves it around. Layer 4 is a derivative. MicroStrategy is a Bitcoin derivative, right? Any company, GBTC is a Bitcoin derivative, Bito is a Bitcoin derivative, but any company that issues a security backed by Bitcoin has created a derivative. Another form of derivative is any country that issues a currency that is backed by Bitcoin also becomes a Bitcoin derivative. Currency is just like the stock of a country.
Sure.
And then layer 5 is Bitcoin products like Open Dime, or when you embed some asset into the hardware device. If you're holding $500 billion worth of sovereign debt, reasonably speaking, you're losing 10 to 15% of your value a year. So it's a $75 billion a year cost to use a currency instrument or currency derivative as your treasury asset. And if you flip the Bitcoin, it would probably be like an effective $25 billion to $50 billion a year benefit. So you're talking about $100 billion a year over 10 years or $1 trillion just to flip your treasury asset. But I think that we're still early, such that, the immaturity of the crypto industry in general with regard to regulatory clarity and the like keeps a lot of the really big money from entering the space. And, if you establish compliant securities, if you fix the accounting, if you establish, banking guidelines for how banks can custody this stuff. What I think, Jeremy, when I look at the digital currency areas, in your business, you've got Tether, you've got your offering, you had UST, and so one of the currencies was not backed by anything.
Right.
The other currency is maybe backed by something.
Right.
And your currency is, your offering is the most transparent. Back to this issue of, is it technically sound, ethically sound, and economically sound? Well, yours is the most technically and ethically sound. And the question was, with interest rates at 0%, if you store all your $50 billion at 0%, where's the economic model?
Sure.
Luckily for you, I'm staring at the swap curve, and right now the 1-year swap is 344 basis points.
Right.
I think what the world wants is a public, transparent, trustworthy entity to issue digital dollars that run on lightning rails to 8 billion smartphones at the speed of light for free.
Totally.
And then they want lots of different ways to get at that. And the real digital transformation is 8 billion people manipulating digital property and digital currency on their smartphone as a store of value, a medium of exchange,
Yeah.
a unit of account.
Yeah.
Think globally, right? The US dollar is going to become the unit of account in South America.
Yeah.
Right? Before Bitcoin becomes the unit of account everywhere, the
Sure.
US dollar is going to be the unit of account. And that's going to be this dominant, the dominant trend of the next decade.